Well, hello, and welcome back to another podcast episode with Brittany Bundles. You are listening to the Brittany Bundles podcast, where we empower people through entrepreneurship. And this is the credit awareness segment. I go over different credit building tips, I go over different financial literacy information, mortgage information, lending practices. Lending experiences for me being in the financial industry as a loan officer for over 3 years. And then I also just go over a collective of information that is geared towards financial stability and credit awareness. So if you are interested in the credit portion of the Brittany Bundles podcast, be sure to share it. Go ahead and share it with a family member, share it with a friend, share it on social media, share it via text. Become creative and just share it with as many people as you can. I'll give you a moment to do that and I'll be right back with you. All right. All right. So again, thank you for tuning into the Brittany Bundles podcast, the credit awareness portion. If you're following me on Instagram under my credit repair page, which is BCH underscore credit repairs, plural. That's B as in boy, C as in Charlie, H as in Henry underscore credit repairs on Instagram, then you would have saw my recent post where I posted asking a question: what type of mortgage do you think is the most common amongst those with challenged or poor credit? One of the things, and before I even say this, one of the reasons for me posting that is because I think it's a great topic to discuss. I purchased my first home when I was 24, around 24, I believe, maybe 23 or 24. And I had no idea everything that went into obtaining a mortgage. I just knew I wanted a mortgage. I knew I wanted to own a home. I knew I didn't want to continue to rent. I wanted to just move into another phase with my life. And so I started calling around and looking at different lending institutions and finding out which one would approve me. And upon doing that, I realized that there were so many different mortgage options that I had no idea about. There were so many different qualifiers that went into the approval process. And all I thought that I needed was a good credit score. I thought that once my credit score got to a certain point, and once I had income for like a down payment or income coming in and then money saved for a down payment, that was all I needed. But there are more contributing factors that go into the approval process when you're looking at purchasing something as large as a home. You know, when you're taking out a loan on anything that is higher in value, there could come with some more qualifiers. And so I want to talk about that today. One of the reasons that I want to talk about it too is because when people are interested in repairing their credit or interested in building their credit, when I get into conversation and figure out their reason why they're looking to do this, a lot of people are on the bandwagon of saying, hey, I'm ready to purchase my first home. I'm ready to get into a mortgage. And so I'm wanting to get my credit repaired. I'm wanting to start building credit. And those are all of the right thoughts, right? Though that's positive thinking and you're on the right path. I do want to put this out there. If you are interested in repairing your credit, if you don't know, I do have a credit repair business. You can go to bchcreditrepairs.com and book a free consultation with me and we can go from there. But today in this podcast episode, I want to talk about one type of mortgage. I want to answer that question and talk about the mortgage type that is most common amongst those with lower credit scores. Because if you're looking at building your credit or establishing your credit, you may not have the highest credit score. And so that doesn't mean that you still can't get approved for a mortgage. I'm not going to go into all of the details that are required for you to get a mortgage through a lot of different lenders, because every lender may have different qualifiers and a different approval process, but it's all very similar in a sense. So I'll go ahead and answer the question. So number one, let's just start off with which type of loan is the most common amongst those with challenged or poor credit. The name of that loan is FHA. Okay. So an FHA insured loan, and I'm getting this information from online. An FHA, because I want to phrase it right, and I don't want to leave anything out, but an FHA insured loan is a U.S. Federal Housing Administration mortgage insurance backed mortgage loan that is provided by an FHA approved lender. FHA mortgage insurance protects lenders against losses. Also, FHA loans allow down payments as low as 3.5% with a 580 FICO or 10% with a 500 FICO. The federal government insures FHA loans, but the loans are issued by private lenders. Mortgage insurance is required on all FHA loans, even if you put 20% down, but the amount and duration vary. Okay, so these are loans that a lot of people take out if they don't have higher credit, or if they're a first time home buyer and their circumstance best fits into an FHA type loan. There are different types of loans out there. We're not going to get into all of the loans today in this podcast episode, but I want to put it out there and let you all know that even if your credit score isn't in a 600, does not mean that you're not going to get a mortgage. Doesn't mean you're not going to get qualified. There are so many people that don't have all the information that they really need to have in order to push forward with the approval process. Just because one lender won't give you a loan does not mean another one won't. But it's really important to understand the entire process that you're getting yourself into and what you're signing yourself up for when you are taking out any type of loan. Okay, so some of the factors that go into the approval process, I did mention that I'm not going to get too in depth with all of the factors that go into the approval process, but it's not just a credit score, but your credit score is factored into it. Now, a 500 credit score, or let's take 580, a 580 credit score with someone that doesn't have a lot of collections, but they're looking at building their credit versus someone that has charge-offs, collections, repossessions on their credit report, those are going to weigh differently. So they're both 580, but they're going to have a different weight when it comes to applying for loans, even if you're looking at doing an FHA. So there are some things that you want to do ahead of time to prepare yourself to get ready to go on that journey. Also, there are some lenders now that can do like a soft credit check, soft credit pull, do an application over the phone and let you know where you stand, and also give you some tips on what you can clean up on your credit in order to move forward to the next process. That is something that I would recommend doing if they are going to do a soft pull, because it gives you an idea of how the approval process works in a sense. You're not going through the entire process, but it gets you familiar with talking to that institution, answering the questions that they're asking you. You're able to gather the information that they're needing, and also you're able to see what it is you need to do in order to change their decision if they're not willing to give you a pre-approval. So you can definitely call. Some places offer an online process similar to what I just went over. But keep in mind that just because one person got approved, because when I was working in the financial industry, sometimes people would call in and they would have credit scores that are very similar. So one time someone called in and they had a credit score of like 615, and their friend called in and their friend had a credit score of like 625. The initial applicant, so the first one that I worked with and did the application with, it was for an auto loan. They were approved. Friend called in, they had a slightly higher credit score, they were declined, and they didn't understand it. Like I said, different factors weigh into where your credit score is at. You can have a credit score of 700 and have literally one credit card, one trade line on your credit report, and that just be a credit card. But you're doing really good with revolving and maintaining that credit card. That is not going to weigh as heavily as someone that has a 625 credit score and they have more of an extensive history of trade lines and a better management of how they're toggling each trade line and how they're managing their credit report. There may have been a slip up here or there, but as long as they have an explanation, as long as you can see that they're stable and that they're making their payments on time, they're going to more than likely have a more favorable outcome applying for loans and getting approved than someone with one trade line on their credit report, because they have experience with secured and unsecured trade lines. They have experience with keeping trade lines for years. They have experience with being able to maintain multiple open lines and being able to make payments. And you're able to actually see their payment history and how things have been. You're able to see that pattern, their payment pattern, and their credit card utilization on more than just one card. So it's not just all in the score. But I do want to put out there again that just because your score is lower doesn't mean that you're out of the game as far as financing a home. Some other factors that go into your approval process is how stable you are. When I work with different entrepreneurs and people are quitting their job and converting to entrepreneurship full time, one of the things that I urge people to do is to be honest and report your income on your taxes. Not just because that's the right thing to do, which it is, not just because you're going to want to keep an accurate record, which you do, but also it's going to hurt you in the long run if you're looking at showing stability and you haven't claimed any income. You want to make sure that you have a track record of what you're earning. And when you go and apply for a mortgage or even an apartment for that matter, more times than not, people are going to want to see your proof of income. And if you're an entrepreneur, they're not going to just take Shopify statements most of the time. They're not going to just take PayPal statements or invoices or your Cash App screenshots showing the deposits that you've gotten from customers. They actually want to see what you've claimed. A lot of times they'll ask for up to 2 years of your recent tax returns. So it's important that you're making sure that you're thinking ahead of the game. You're thinking for your future when you are looking at claiming your income. Now, a lot of people think they're cheating the system by not claiming their income until it comes that time when they are wanting to finance something and they don't have the proof that's needed for the approval process. So be sure to keep that in mind as well. Another thing that can really help when you are getting ready to apply for a mortgage is making sure that you have a good savings, because a lot of times financial institutions will ask for your bank statements. They want us to actually see how much money you have. They want to get a closer look of what's going on in your financial life, which it makes complete sense. So you just want to make sure that you're looking at all of the requirements and you're not getting hung up on just the score. Like I say on my YouTube channel, I used to make, and I still do, but I used to make a lot more credit related videos on YouTube, and I still have them on my YouTube channel at Brittany Bundles in the credit awareness, in my credit awareness playlist. So you can go over there when you're finished here and take a look at some of those videos. But I always say it's not just about your credit score. It's literally about your entire credit profile. It's not just about one factor. It's literally about the whole picture. When institutions are lending you money, they want to make sure that they're doing the best that they can to ensure that they're going to get that money back with interest. So that's what I wanted to talk about today in this podcast episode. If you'd like me to go over different mortgage types, I'll be more than happy to do that. But the point of this podcast was just to answer that question that I posted on Instagram a few days ago. Just letting you all know that the most common mortgage type for applicants with lower credit scores are FHA mortgage loans. And just, letting you know that it doesn't mean you're out the game if you don't have a 700 plus credit score. There are different ways and different mortgage types out there that may help. So I appreciate you all for tuning in. If you'd like to be a guest here on the Brittany Bundles podcast, be sure to email me at the letter B, talks, TALKS at yahoo.com. You can also visit me online at bchcreditrepairs.com. I do want to thank you all for tuning in, and I will talk to you all in the next podcast episode.